safe, and happy 4th of July, remembering what once used to be our independence. Very interesting times we're living in, folks, right now, obviously with the revelations of what our government's been doing to us without our knowledge, but also just as importantly, the economy or the state, just the overall malaise that our country is in. Now, many of you might be sitting there and saying, well, Whiz, what are you talking about? We had great jobs numbers on Friday. And I'd say you're smoking what the White House is putting out, folks. The number of full-time equivalent FTE jobs in America went down by 56,000 in June. Okay, and all these folks and the White House hailing what a good jobs report it was. You ready for this? The economy replaced 272,000 full-time jobs with 432,000 part-time jobs, getting net about 160,000 gain in employment. Is that good news? Do you really think that's good news that we're putting all these people on part-time labor? There's one word for why this is happening: Obamacare. The Wall Street Journal called it a fiasco for our times. It is an absolute train wreck, folks. And I, as a Fortune 500 consultant, in addition to being a chief investment strategist, I see what's going on in boardrooms. I see what's going on at the executive level of companies throughout the United States and literally around the world. And they are absolutely mortified, terrified of what comes out of Washington as far as mandates. And they're booting as many people as they can to be part-time employees. Does that sound good? The real number, I call U3 the liar number, right? This is the official unemployment rate. That's what politicians use. And 7.6, it's unchanged. Here is the real unemployment number, folks, from the BLS, the Bureau of Labor Statistics. It's called U6, and it went up by a staggering amount between May and June. Look at that. Absolutely a 13.8 to a 14.3 handle. What is U6? It's the total unemployed, plus all persons marginally attached to the labor force, plus total employed part-time for economic reasons, right? And this is literally people who, former executives who can't find work now, who are working at Starbucks. I mean, taking any sort of job that they can to eat. You think this is great news? It's absolutely horrible news for our country, folks. But what do we end up doing, right? We just end up going higher and higher. But a couple canaries in the coal mine that I want to just call your attention to. Look at this. As we enter Q2 earnings season with Alcoa, unofficially with Alcoa kicking it off today, and get some financials later in the week like a Wells Fargo, the negative to positive pre-announcement ratio is the worst since the first quarter of 2001. So the number of companies rushing out to a microphone to pre-announce and say things are going to be horrible is the highest in 12 years. I have a 13-year-old son. He was an infant the last time it was this ugly. Okay? That's not good, but what's going on in the market? Now remember, folks, the economy and the stock market are completely disconnected. The market goes higher and higher and higher on the Fed's hopium as U.S. macroeconomic data go lower and lower, right? The data aren't good. The data is actually horrible out there. But the market keeps going higher on the Fed's hopium. Now, the Fed chief tried to do his job 2.5 weeks ago, 3 weeks ago, by shooting across the market's bow and saying, hey, I'm going to end this quantitative easing. And then his lieutenants did the worst job by going out and saying, just kidding. So the market is grinding higher, saying, you know what, we know the Fed's not going anywhere. He's going to try for a soft landing. And even though the data aren't good, he's not going anywhere. So he's created this Frankenstein monster that is going to grind the market higher, and eventually this thing's going to end, and it's going to end very, very poorly. On a day like today, when the market was up triple digits, we had a 110-point rally on the Dow, about 10, 11 on the SPOOs, but look what's going higher today. The VIX. So as the market's grinding higher and buying with one hand, the market is also going out and seeking protection. On a day when the market is up and the VIX is up, you should be very, very concerned. The market, of course, the VIX is going to go up a little bit as we enter earnings season because of what? Because of uncertainty and because of what I just briefed you on. If you didn't know that this was the worst, negative outlook since, in 12 years, you'd be wondering what's going on. That's why. And the market just isn't believing what's going on, and the market's starting to get a little creeped out about the confusing messages that's coming out of the Fed. Now, the Fed chief's speaking later in the week, I think Wednesday afternoon at some conference, the first 100 years of the Fed or whatever he's talking about. But we're also going to get a look at the FOMC minutes. They're going to be released on Wednesday, so we're definitely going to get a look into more of the printed word as opposed to Bernanke's spoken word about taking his foot off the accelerator and tapering this and all the memes and adjectives that they're using. We're actually going to see the written word and see exactly what they're thinking. So very interesting times we're living in, folks, as we get ready to enter Q2 earnings season, and the market's on pins and needles already, and we have conflicting messages out of the Fed, and we're gearing up for an earnings season that could potentially be very, very bad. But I'll tell you what, we're having a great time over at Top Gun Options. I mean, our primary trade alert model portfolio is up nearly 200%, up 187%. Even our primary live trade brief model portfolio is doing great, up 28%. Let's compare that to what's going on with some other, quote, smart people. The average hedge fund as of June 21st is only up 2.5% year to date. 2.5% year to date. And the S&P 500 as of the end of June was only up 12.8%. So the primary live trade brief is outperforming the S&P 500 by a factor of 2, and then obviously the primary trade alert model portfolio is just blowing it out of the water, up nearly 200%. So a lot of good stuff going on over at Top Gun Options. So if you're having a pain in the neck trading this market, we're not over at Top Gun Options. You can hover over services and go to that first drop down if you're interested in a test flight of our trade alerts and live trade briefing services, or our weekly options live trade briefing service, which I just wrapped up. Our Monday morning live trade briefing service put on a couple new trades, a Netflix Iron Condor and a Goog Bull put spread. We had a great June, folks. Here's our June performance, up $4,200. My mission objective in the weekly options model portfolio is to gain at least $1,000 per week on average in our weekly options model portfolio, and did that in June. Would have been up over $6,200, but I put on some insurance. Not weekly insurance. I actually just put on some portfolio insurance via the SDS, Sierra Delta Sierra. The SDS is the ProShares Ultra Short. So if the market imploded in June, this would have made money. Now, I don't look at this as losing money. This is my mindset as a professional trader. I look at this as insurance. I don't sit here and gripe whenever I write my homeowner's insurance or my car insurance, because I know if I bend myself around a tree, my house blows down, or a hurricane hits, or I get robbed, which I have, unfortunately, that pays off. So I felt great. So even though this lost a little bit of money and I didn't see a full $6,200 in profit in a month here, hey, $4,200 averaging $1,000 a week beats a stick in the eye. And let's take a look at our performance month to date. In July, we're already up close to $3,700 in July alone, and it's what, July 8th. So on track to have a great month in the weekly options model portfolio, and like I said, a lot of good things going on here at Top Gun Options. But be careful, folks. U6, and I don't even believe this U6 number, folks, 14.3%. You look at the number of folks on food stamps, record number of Americans on food stamps. You look at Americans on disability. Now, I must have an old, outdated version of the Webster's Dictionary about disability, but people on Social Security disability, these are kids just throwing up their hands, living in their parents' basement, eating Cheetos because they can't find work. And guess what? Not only can they not find work, but they're about to get hit with a tax. We'll call it a fine, because of Obamacare. They're going to have to go out and buy health insurance, even though they're young and healthy, because they're going to have to pay for old people. It's just, welcome to the United States of America, spelled with a K. A lot of creepy stuff going on here, folks, and I'll tell you what, I'm going to be ready for when the music stops, and I'm going to potentially profit when this whole thing ends and implodes. Might not be today, might not be tomorrow, but it's going to come. And I hate sounding like the crazy guy off the I-95 exit ramp with my tinfoil hat, but I'm going to be right eventually, and I'm going to be right, and I'm going to be protected because I know how to trade this market. Okay? Got to run. Happy hunting. Make sure you hedge, and I'll be back throughout the week over at Top Gun Options with our daily situation reports that you can see at topgunoptions.com. We'll see you.